Hi, this is Cary with Wicked Signal, bringing you another video analysis. This one on Oracle Corporation, symbol ORCL. I did record this video on Sunday, March 14th, 2021. This is a monthly chart you're looking at with the extreme rotational sequences over the last, 20 years plus. You've got the preceding 46-47 high that went back to 2000. That held for about 14 years. We broke to 7.25 in 2002. Took that 46-47 high out in 2014 by just a bit before falling back to 33.13, so forth and so on. And most recently, 73.62, an all-time high. That was in March, just a couple of weeks ago here, March of 2021. I'd like to tell you a little bit about Oracle if you're not familiar. I imagine you are. It is considered, a technology company. It is presently headquartered in Texas. It had its origins in Santa Clara, California back in 1977. It moved to Texas a few years ago, I think December of 20. It sells database software and technology, cloud engineered systems, and enterprise software products, particularly its own brands of database management systems. In 2019, Oracle was the second largest software company by revenue and market capitalization. And that's about all I'm going to say about the company itself. Now you're looking at this chart here, you can see these rotational sequences. I'm going to start with a monthly chart and we'll work our way into a weekly chart and even zoom in a bit to show you some very specific price support and resistance levels, targets that I'm going to outline here before the video is over. But before I jump into Oracle, let me first tell you just a little bit about wickedsignal.com. For several decades, I've provided reliable technical market analysis to prominent fund managers, brokerage firms, and large-scale commodity producers. And Wicked Signal was created in 2020 with the aim of being your go-to resource for reliable stock market recommendations. Employing the same classic chart analysis, our stock market signals are clear-cut and range from 2 to 3 weeks out to 2 to 3 months and often beyond. We offer two distinct subscription choices: basic membership, which is free and always will be, and provides one free stock market analysis video every week. Filling out the membership form within the basic area will allow us to prompt you by email each and every time a new video is ready for your viewing. The second subscription choice is a premium membership, which costs $24.95 a month and provides 2 or more market analysis videos every week. Over the coming weeks, we intend to ramp that up to provide at least 3 new market videos every week. Included in the premium membership will be a growing catalog of video resources to include important trading and investing topics like effectively managing your own portfolio, effectively managing trading risk, effective trade execution correlated with your risk management strategy, technical analysis tips and techniques, so forth and so on. Clicking on the premium membership link will allow you to access our safe and secure payment gateway and make credit or debit card payment. Your subscription fee automatically transacted on a monthly basis. Subscription cancellation is allowed at any time. So please pass the good word. Tell your trader and investor friends about wickedsignal.com, and if you haven't done so already, at least sign up for the basic free membership, for you then be notified by email each and every time a new video is ready for viewing. We'll never share your personal contact information with anyone outside the Wicked Signal organization. And so this is the monthly chart that goes back over 20 years, actually almost 25 years or so. And I like to take a look at, preceding structures the market has violated. And most recently, we do have an ascending channel top that for the entire month of March is at 64.43. Now bear in mind, this is a monthly bar chart. And I'm going to kind of show you the big broad brush stroke right now. So holding above 64.43, and there are other things in the 60s I'm going to show you in just a few moments, but this is sort of the early stage of long-term support at 64.43 the entire month of March, and above which I've got a full channel extension. This is a targeting mechanism I've used for years, especially when there is no precedent for these price locations, which is, we're in uncharted territory right now. So picking a target right now is not tricky. It's just that you have to rely on how should I say, abstract imaginary targets, not preceding price levels or formations based on preceding price levels. So right now, that full channel extension, which reduplicates the width of the previous channel is at 86.79 the month of March, and it rises a full 6 months later to 87.96 the month of September. So you can subtract those out, divide by 6, and you'll know where that targeted channel extension is each and every month all the way through September of this year. And I consider this to be a realistic target. The big question for me, and I'm sure for you, is this is going to take months or is this going to take several years? You know, it could take several years. Bear in mind, this is a monthly chart. But given the price acceleration that's been playing out for the last month or two, you know, it is quite possible we could see this full channel extension over the next, I don't know, 3 to 5 months. Also may be a bit of a stretch, but into later 2021, I think is certainly possible. And we also have a full swing price swing. Now, this is another mechanism or method that I use when I don't have any previous highs in the current vicinity and I'm trying to ascertain what is the target, and that is the full swing. If you take a look at that 2000 high, we broke to 7.25 from 46.47 2 years later. Now we're well above that 46.47 high. A full swing, in other words, a 100% swing to the upside beyond 46.47 by that same distance is 85.69, and that is a static level. It will be there forever until we actually test it. So 85.69 can be considered the start of a kind of a widening zone of very long-term resistance up to 87.96 by September, as you can see here, that I consider to be a long-term objective. You know, it is an area where the market could certainly top out on an annual basis. Let's zoom in just a little bit. This is a monthly chart. I'm going to create a weekly chart and show you here in that same area. And I'll throw that channel top in that you were just shown a moment ago in the monthly chart. This is the weekly chart. So it comes in this week, Monday, March 15th at 64.47 and rises a full 8 weeks later, the week of May 10th to 64.83. You can subtract those out, divide by 8, and you know exactly where that channel top, that now new support is each and every week in between, all the way into the first or second week of May. I'm going to zoom in one more time and show you even more that's going on in the 60s, and that is an ascending channel bottom. So those two top numbers are the exact numbers I just gave you a moment ago in the preceding slide. That is that long-term former channel top, but we have new channel bottoms now coming up. At 61.02, the week of Monday, March 15th, rises to 64.20 the week of Monday, May 10th. And here again, you can subtract 61.02 from 64.20, divide by 8, and you'll know where that channel bottom is each and every week in between. It is a what I would call a narrowing range of meaningful support that begins at 64.47 and ends presently at 61.02. And of course, as we get into early May, it all comes together in the $64 handle, as I'll call it. And this area can absorb selling through the second quarter. And in fact, despite the fact the market has broke back last week, closed negative on the week, the full accelerated momentum of this rally can reawaken at any time above the 61.02 formation, preceded by the 64.47 long-term channel top. So, you can bottom pick this zone, in my opinion. And obviously you need to give it plenty of breathing room down to 61.02 if you do buy 64.47. But this zone, able to absorb selling through the second quarter, and from here we can quite easily push onward and upward to new highs over the next 3 to 5 weeks or sooner. I'm not showing any price targets if we do close below the 61.02 formation at the end of any week, but I will say this: no good reason to be long Oracle into later year, or at least through the second quarter, if it happens to settle below 61.02. But I'm not expecting that. I do think there's enough buying interest in the low to mid 60s that this stock can stabilize and then push onward and upward to new highs in the weeks to come. Let's take another fresh look at resistance. Same chart. I eliminated all those studies so I can show you a rising channel top. Presently, this week, Monday, March 15th at 75.66, rises to 79.15, 8 full weeks later, the week of Monday, May 10th. And you can subtract those two numbers out. I think that first number is reversed. It should be parentheses should be 0315, but I think you can see what I'm trying to say here. That channel top rises from 75.66 to 79.15 over the course of 8 weeks. You can subtract those out, divide by 8, and you'll know where that channel top is each and every week. That channel top is able to contain at least weekly, possibly monthly buying pressures when tested. But as I showed you earlier, the longer term target still remains in the what I'd call the mid to upper 80s, which is this 85.69 to 87.96 region. So, just know that if we happen to test 75.66, I don't see it this week, but that channel top over the next 2 to 3 weeks, certainly possible, able to contain buying through April trade perhaps if we test it in the next 2 to 3 weeks, and if settled above, should then yield pretty quickly that longer term objective in the 85.69 to 86.79 region. I would say within probably 3 to 5 weeks of that. And that would be an accelerated move. I'd mentioned how it could take well into later year to reach that mid to upper 80s target. But if we get above and close above that 75.66 formation, I think we're talking 3 to 5 weeks actually in that upper area, mid 80s to mid to upper 80s. Able to contain annual buying pressures if or when tested. One final note with regard to this near-term chart. 72.64 is the high settlement on the daily chart that was put out about a week ago. And if we close above 72.64, expect that 75.66 formation, a lickety split, 3 to 5 days. 2 weeks at the very most. I think more like 3 to 5 days. So that's more of a just to let you know when I would fully expect in quick order a test of that 75.66 channel top, and that would be a settlement, a higher all-time settlement, which would be above 72.64. Until then, we could fall back once again into the low to mid 60s, and this is the chart that I'll leave you with. It is able to absorb selling through the second quarter, and above which the mid to upper 80s remain a big picture objective. And that is really all I'm going to say for this particular Wicked Signal video on Oracle Corporation.